Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, June 30th. It's 5:45 as I'm starting the video. Taking a quick look at futures. SPY and QQQ are pretty much right around the flat line, down just a little bit. They are going after small caps this morning, down between 0.6 and 0.75%. That's going to be something to watch in the pre-market that'll possibly also bleed into the regular session. Nat gas continues its breakout, up 2%, and oil is up 1%. Precious metals are down just a little bit. Looking at the macro picture this morning, we've got mortgage applications at 7 a.m., ADP employment report at 8:15, Chicago PMI, pending home sales, and then oil inventories at 10:30, along with our complimentary couple of Fed speakers every day this week. Now, looking ahead, we've got, well, let me back up a second. Today marks the end of Q2, right? So we start a new quarter tomorrow. Couple things. Are they going to ramp prices today in a window dressing move to close the quarter strong? Is there going to be added two-way volatility today as people reposition for the new quarter? I want to just put this thought in your mind as far as strategy goes in your positioning. Most of us are long. The degree to which you're long, I have no idea, but I'm pretty long right now, and you know most of the positions that I'm in. If there's some kind of ramp today, what I plan on doing is peeling off a lot of risk. Why? So they ramp it to end the quarter. Tomorrow would be a great day to pull the rug, right? Because the window dressing was fake. That kind of idea. Also, we got a big jobs report and we got a big OPEC meeting tomorrow. That's probably not going to have some dramatic effect on equities. I think the risk tomorrow is the end of the quarter, pull the rug, suck everybody in today, and then open the trap door tomorrow. But also, Friday morning, we've got a big jobs report. Now, those haven't resulted in massive moves the last two prints, but we're also heading into a 3-day weekend. So I think there's a decent chance of more of a risk-off kind of feel into a 3-day holiday weekend. And for me, I mean, looking at SPY here, we've had a nice 2-week run off the bottom of the channel. Now we're at the top of the channel. Just purely on a technical basis, you'd expect to come back and visit the midpoint of the channel like we've done many times before. So why sit there, especially if they give us a green move today? Why sit there at the top of the channel into a 3-day weekend hoping that they break out of the channel and go nuts over, the next few weeks? I'd rather take some risk off here at the top, see if they do something tomorrow and Friday, and if they don't, that's fine, no harm done. But if they do, and then we come back next week and we're down here at the midpoint of the channel, that would be a great place Tuesday to maybe look for a long. Now, in the blog this morning, I posted a very interesting graphic that I was very surprised to see. Guess what the strongest 2 weeks in the calendar is on the S&P 500 going back all the way to 1950. It's the 2 weeks that start July. And I would never have guessed that in a million years, that would be the, on average, strongest 2 weeks of the year. And the only thing that I can think of is June is typically one of the worst months seasonally in the year. And so if you're kind of down coming out of June, then you get a rebound into July. And also remember the run up into earnings that start in 2 or 3 weeks would make sense, because heading into earnings is usually positive. So to make a long story short, I'm going to probably take off some risk heading into the weekend. Have some fun, decompress, feed the brain, get ready for the second half of the year, and then look Tuesday, kind of reassess where we're at, knowing that we're heading into earnings, knowing that seasonally the first 2 weeks of July have been historically very positive, and then take it from there. So whether you want to follow that strategy or not, I think that's what I'm going to do today, and see how it goes. Of course, I'm hoping that they juice it today so we can get out at the highs, but we'll have to see. So as I just mentioned, SPY 2 hour, really doing nothing here at the top of the channel. We've got PPO flattening out. If that were to put in a bear cross, that of course would portend some downside. And also we're slightly overbought on RSI. Those aren't sell signals, they're yellow flags. So keep that in mind. On the 30-minute chart, you can just see we're up here. I've scratched in a very minor support level at 427.50. Depending on if and how much you want to be active, if we drop below 427.50, could open the door back to 426. And then, of course, we've got these gaps down here that may come into play either later today, tomorrow, Friday, whenever, or if they drop it down pre-market and then recapture 427.50 towards the beginning of the morning, then that would be a buy signal. Recapturing a level from below is your buy. So those are the levels on SPY. QQQ 2 hour, grinding our way higher on the lower half of a larger rising uptrend. Now technically, what do we want to see? We want to see a recapture of this midpoint line. Why? Because the midpoint of a channel often acts as support and resistance for price. So if we were to pop this midpoint line, then that should act as support for a run up to the top of the channel. Now that's, well, if they decide to ramp it today, it could easily do that. Put on a couple dollars and you're there. So we'll just have to see. On the downside, you do not want to see price break this channel. Otherwise, it's got a clear path back to 351. And we've got some open gaps down here that would need to get filled on any corrective move. And as we've talked about, 342 was our original breakout level. So we could see if there's some kind of corrective activity, we could see a pullback into 342. That's not a prediction. That's just the facts of where the support areas are. Here it is on the 30-minute chart. And if you're an active trader, I mean, all the same comments that I just made on the 2-hour channel hold equally well for the 30-minute channel. Top of the channel, bottom of the channel, top of the channel, with the midpoint acting as support. So if we grind our way higher, then come back and break below this midpoint line, that would favor a move back down to the bottom of the channel to test that low, and then that would be a great place to get along at the bottom of the well-defined rising channel. As long as it stays above, no particular reason to get out, because we still got upside. We still got room to the upside here to push up 356, 357 before we'd get up to the top of the channel. And RSI still strong, PPO still strong, although there is a little bit of a rollover here. So that'll be something to watch. IWM has been the problem, and we've kind of beat the story to death, but I'll just go through it one more time. Benign interest rate environment. Got rates pinned down below 150 in that sweet spot between 140 and 150 for big cap tech or tech in general, along with the bubble stocks. And higher beta stocks have been doing well in this environment. And I think now there's some of this corrective activity in the reopening trade. The travel stocks got killed yesterday. This COVID variant story is building a little bit of momentum. Europe has just instituted a number of new travel restrictions. For instance, Hong Kong is not accepting any flights from Britain. Ditto Portugal and Spain, no flights from Britain. Or severe protocols when you land. You go into Portugal for a 2-week vacation and you get there, and then you got to spend 2 weeks in quarantine before they let you do anything. That just translates into canceled travel plans is what that means. So it hasn't been a big story here, but worldwide it's gaining some momentum, and I think it's bleeding over a little bit. And I told you this morning, pre-market, we're down 0.75%. So here on the charts, 229 becomes a key level. You break 229, could easily come down here to 225.50. And remember, this gold EMA, which is the 200 EMA on the 2-hour, is the same thing as the 50 EMA on the daily chart. So I could see very easily that if this 229 broke, you come down for a tag of the 50 EMA on the daily chart, and then that would be a place that I would expect for price to hold. Here's the exploded view action over the last few days. We had the rug pull. First tag of key support usually holds, just like the first tag of a gap usually holds. Got a fib bounce, then they roll it over yesterday back to the prior low. Now this morning we're below this level quite significantly. We're down in the low 228s, high 227s. You come down and break that, then you're down into this 225 area where that 50-day EMA resides. So watch for a downside move on IWM today. And then on the bullish side, if we're down here in the pre-market and then they ramp it and recapture these lows, then that's your buy signal. Fake breakdown, pre-market, come up, recapture, and then go. So watch that. There could be potentially be some nice two-way trading in IWM. Facebook. Yesterday, I hypothesized that after this big impulsive move that you may get a halfback fib move off of this high, and that's exactly what happened. Doesn't always work that well, but you can see that we pulled back to the 50% retracement level, and got a bounce of, well, I think on the 5-minute chart, we reached down to 349. So we closed at, call it 352. That was a nice $3 bounce if you were actively trading on a 5 or 15-minute time frame. But let's just look at the daily. I think that's where we want to focus our attention. Consolidation range, nice uptrend. We're here at the midpoint of the channel, and all those comments about the midpoint of a rising channel hold here. So the bulls have got to pop this 355 and get above, and then it can have a free run, or the potential for a run up to 380 at the top of the channel. And so you can mark that high of the other day as a buy trigger, or if you get a further pullback down to the 8-day or down to the bottom of the channel, that would be another place to try a long on Facebook. Strong chart. Looks like it's heading higher. Of course, it's going to be subject to the same dynamics as everything else at the end of the quarter. What do they do between now and Friday? But on a longer term perspective, I think Facebook is going higher. Here's the Apple daily. We got the breakout that we were looking for here at 134.50-ish. I think from a technical perspective, the door is open to 138. And from there, you take out that level, then the door is open to 144. What I wouldn't want to see today is a move back below 134. Why? It will look like a fake breakout, just like this one was. That would be, a sinister move, technically, to get everybody to pile in and then reverse it and break back below, because like any breakout, if they reverse it and go the other way and break back into the prior range, I could easily move this line up and say double top right from here to here at 136 and change. So watch that real close. Ton of call buying, absolute ton of call buying yesterday, looking for Apple to go higher, not only into Friday, but longer dated stuff into August and September and December of this year. So a lot of institutional call buying, but that doesn't always mean they're right. So it is a positive sign. You always like to see institutional call buying supporting a move that you're in favor of. I'm long and hoping for a nice push today, and then probably lighten up a little bit for heading into the weekend. Tesla had a nothing day. It's got to pop 690 to keep going, up to 710, and then up to this gap on the daily chart, as we've been discussing. Got the breakout. We're treading water above, but no damage technically. I'd stay long looking for 760 down the road. Microsoft had a real nice day, up 1%, breaking above the midpoint of its rising channel. So technically speaking, the door's open to 279, 280 at the top of the channel. If you were long and you got 280, I'd be taking some profits. Why? Because the top of this channel has proven in the past a place where it's come back down to the bottom of the channel. So, one final big move up to 280, and then I would certainly be lightening up, or if you are committed to a long-term position, I would be way out in time if you're going to sit in any kind of a corrective move. So, but Microsoft looks strong. Amazon didn't do anything yesterday. We're still here at this 34.50 level. Got to see it come up to 34.90, 3,500 up here. And then, as we've been discussing, got to get the breakout. If this market is going to go higher, it's not going to go higher without Amazon. I mean, let's face it. I don't think Amazon, comes back down here. And while, Apple and Microsoft go to the moon, I think it's got to participate. Even at some level, it doesn't necessarily have to lead, but I don't think it can go down while, and have the Qs perform at any significant degree. So I've been really focused on this 35.50. And as I've mentioned in previous episodes, you get a breakout above 35.50. The technical target is 4,000 or more. So you want to be long there, but you can't front run it. You got to wait for the move. So that's where Amazon lies. Google, nothing. Waiting for this breakout above 24.50, and that would open the door to 2,500. So really no technical progress here. Nothing bearish. I mean, it's hovering right here, flagging below resistance. So you just got to wait for the breakout and then grab it if you see it, and then hopefully get that $50 move. SMH, different view here. We've been working off the 60-minute chart, but I wanted to give you the big picture. And this is a significant slide. Big wide trading range that goes back to the beginning of the year. And I think I've drawn this pretty fairly, having a low down here at 223, visiting the top of the range multiple times. I've got it drawn at 258. If you wanted to draw it a little tighter, I could certainly see you draw it at 256, which is what we were working off of the daily chart back in here. But the fact remains, we've just broken out of a $35 wide trading range, and say we're sitting, let's call it round numbers, at 260. The measured move is 295. I mean, that's just what it is. So if you're bullish on this market and bullish tech, you got to be long SMH against 258. You got, let's just call it $5 of risk. Let's just say you gave a stop back to 255, back inside the range, with $35 of upside, 1 to 7 risk reward. I mean, you gotta take that trade. Now, does that mean you got to take it today or tomorrow or Friday? No. But if you got a pullback, if Micron reports tonight, if they lay an egg and the broad market pulls the rug Thursday and wants to lighten up Friday, you may see this come back in to the high 250s and then be ready Tuesday for the re-ramp, and then get long. If you're a position or a swing trader, you can go out to September. You could go out to January and stay in this name as it grinds higher, and then you can raise stops along the way on your longer term position type trade, in your IRA or longer term account, and not worry about, the wiggles. Plan on getting a run like this where you get more or less a unidirectional move. So what I want to do right now is go through the sector ETFs just very quickly. Materials, break a trend, down move, Fibonacci bounce. If the dollar stays strong and interest rates stay low, this is a reopening play. And until I see more, it's not working. And in fact, if you were looking for a short, I would have 80-50 alarmed. You break 80-50, you're coming down to the 200 down here at 76. And, that's going to be a $4 or $5 trade. That's going to be a nice trade. Here, I'm not really motivated to do anything at all, either long or short. You're below the 50, you're below the 20, you're below resistance. I mean, it's a short, if anything, but I don't think it's a high probability short. If you wanted to do it, it's fine. You could get a move back down here to test the prior low, and with any luck, this would be a bear flag that breaks all the way down. So I think the posture is bearish on materials. Communications got the breakout. What you're basically looking at there is Facebook and Google outperforming and breaking out. You can be long against 80, no problem at all. Energy had the rug pulled last week at the top of a divergent high, came down to the bottom of the wedge, has been contained. OPEC's got its big meeting tomorrow. You see a break of 51.50. That's a place to get short, and you'd be looking for 47 and possibly a move down to the 200. But see, there's a little void in here. Not as much. You're on a shelf right here with a large volume over price support bar. So I don't want to do anything until we see what happens at 51.50. It's supposed to hold there, but if it doesn't, that's your short trigger to come down to the next level, which is at 47. Financials. Rug pull last week. Fibonacci bounce. Yay, everybody passed the stress test, and now they're doing buybacks and divvies. Traded like crap. They didn't do anything. So we're kind of pinned here between 30, let's just call it 37 and 36.50. I think it's a place to watch. It's a very similar setup to the materials trade. If you get a break above 37, I think you can take it long because you're going to be above the pivot point, and then you're going to be above this volume over price resistance bar. So you get a break above 37, I think you can be long. But otherwise, I would want to see if this can, you got the 50 there. So chances are, if this cyclical reopening trade fails, come down here to 35.25, and then if you miss that level, you're coming down to 34 for sure. Industrials, right back here, toggling on the pivot at 102. I'm not motivated to do anything massive here before the weekend, as I mentioned, but you break above 102 convincingly, that would bode well for the reopening type trades. But you lose 102 again. They saved it last time right here at this volume over price bar. They saved it at 99. Rolls over again, you might see that come all the way to 97 if people really start getting, really start backing out of the reopening trade on industrials. Big breakout on XLK. What you're looking at there is Apple and Microsoft and Facebook and all that stuff, software, semis, all that stuff doing well. So above the 8-day, above the 20-day, everything looks positive. Positive PPO, positive RSI, that looks strong. Your big warning sign would be a break back below 143. XLP, not a real focus of mine, but bulls need to see 70 taken out to get long, and then become pretty cautious below 69. Could come back here to 68. I mean, we're talking about $1 either way, but it is what it is. XLV, I bought this breakout, not really doing much, but nothing wrong technically. Above the 8-day, above the 20-day, defensive type characteristics. If there's some kind of a down move, you may see some money flow into healthcare along with the other defensive type sectors. If there's a wobble tomorrow or Friday or at any time in the future. XLY, I bought this breakout above 173 with the EMA support. It's going well so far. It could really use Amazon's help to get going. That could be a catalyst to break it above 180. I bought the 175s initially for July. I think I sent a note out that I rolled those up to 178. So I'm pretty much at the money right now in July. And so what I'm looking for is a break above 180, and then it will be on its way on a breakout. But PPO looks good. RSI looks good. A lot's going to depend on Amazon. I've been pretty surprised that XLY has been able to move up to this degree with Amazon going the other way. So I can't imagine where we'd be if Amazon was up $200 rather than down $100. So that's why I'm rooting for Amazon, along with a bunch of other reasons. Let's wrap it up here. If you're new to the channel, I hope you gained a lot from the information. I truly believe that if you get to the point where you trust my levels and can take them to the bank and can enable yourself to focus 100% on executing around the levels that I give you, you're going to be a better trader. You're going to get better results. Hit the subscribe button, hit the alarm bell. You'll get my YouTube content. Also, jump over to the show notes. You'll see links there, not only to the blog site that'll have extra information that I write up every morning. You'll see that graphic this morning on seasonality over the next 2 weeks. You'll also see some extra commentary on different sectors and tidbits. There'll be the earnings calendar there, etc. But there's also a place to register for all my content. That way, midday notes, weekend notes, after hours notes, pre-market notes, you get right to your email box. You won't have to go hunting Twitter and any other of the social media, Facebook, any of those places where I may post information. It's really the best way to get access to my content. And of course, longtime listeners, I really appreciate you being here. I feel like we've got a little momentum going. Anything you can do to help by passing along a link or a mention in your Twitter feed or your trading circle, wherever you spend time with other traders, I would really appreciate that. So let's see how we wrap up the quarter today. Stay on your toes, and I will do my best to get out a midday note, or at least one before the close, especially if something happens. I mean, if we're sitting here, flatlining, there's not a lot to talk about. But if we get some kind of a move, I will certainly keep you filled in today. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.